So happy to be with you guys. Let's talk about what's happening in this market this week and what we need to be looking for and all that stuff. Hey Sharon, good to see you. There's definitely lots to discuss. What's everyone? How's everyone doing? What's everyone seeing in the market? How's everybody's positions doing? We've seen quite a little correction in the last several trading days. We saw the SPY right here flying just high as ever, high as a kite. And, up here in the 350s, mid to upper 350s. And then here we are at where were we at? 333 is where everything kind of ended. Aftermarket, post-market here is trading a little tiny bit higher, but the market closed, the SPY closed at 330, just below 334 today. What do you guys think? Is this a preview of coming attractions? Is this just a little situation we have going on? What's everybody thinking? How's everybody feeling about all this? Is the market headed lower? Is it headed back up again? What's everyone's kind of sense of what we are seeing happen here? Don't be shy. Type away, folks. Type away. I'm definitely curious. How has everybody's stock and options positions been doing? How are you guys' positions hanging in there? Don't want to see how things shake out. Jim, hard to be plus. Yeah, you got a lot of exposure there. That's all right. Lenny, choppy, but back up again. Confusion with everything going on. Choppy. Okay. Some rhinos just want to move things their way and make some bucks. Yeah, that is true. Okay, so here's a little bit of what we have in all of this. And here's there we go. Here's kind of how I see all of this coming along. Now, we have chatted many times about kind of where the market might be headed, right? And we've talked about, we know for a fact that, as we get these long runs up, things have to correct, right? And how far they correct is always the question mark. We were starting to get quite a bit of, up here, we were starting to get quite a bit of distance between the current market price and that 200 moving average. That's kind of always my benchmark of, where are things, right? How overextended are we? How underextended are we? And so on. So this was getting pretty up there. So we saw SPY get up there pretty good. And now it's starting to break out. Now, in several webinars ago, we talked about patterns, right? Everybody remember the patterns? I've got it somewhere on here. You guys remember this? This guy. This was maybe 4 or 5 webinars ago that we said, look, sometimes we just need to keep trading real simple and say, what are some of the patterns that we're seeing? Where are we on the right side of the trend lines and where are we on the wrong side of the trend lines? And right now, we have this interesting kind of rising wedge in the stock market, right? We're kind of in this rising wedge territory here where it's made a big, strong come up. And I'm just looking, right? And, it's not to say that this is going to play out exactly like this, but if we're looking at patterns, these are the kinds of things that we want to be watching, right? Here's a pretty well-tested area in this setup, right? It's widening or it's narrowing slowly, and then it starts to break out. Right, and the question is how far does it go, and kind of what's happening here. But that's a nice clean pattern. That's a very clean breakout. That's a good rising wedge that we would expect to continue lower. Now, what do we want to see if we're just simply trying to kind of follow the momentum? If we're bullish on everything, we don't want to see the S&P, for example, or the SPY here, take out lows, right? So if we're just talking momentum, that's a low, right? That's a little bit of a consolidation right through that little area. And that kind of goes to where, you know, to where the market gapped down over here. Get rid of some of these lines. So consolidated here and then gap down when we all realized the end of the world was staring us in the face and it wasn't wearing a mask yet. So we had that big dip down right there, and then it's slowly worked its way back up. And so now we're at a decision point. How much lower is the stock market, the S&P, the NASDAQ, the Dow going to go? We'll see, right? But right now we're at this decision point here where we're saying, okay, it might be time to start looking for lower targets. And I think we could see some of that happen. This was a pretty bad day, right? How many points did we end up down on the Dow and the S&P and all of that? I don't usually look or care too much as far as the points. I want to see what these charts are doing and how much they're moving. But Dow 400 points down, right? S&P closes almost 60 points down. NASDAQ 220 points down. So we're seeing this kind of movement happen. We've got lower targets to be watching for, and those kinds of things happen. So what is the best thing that we can do in a market like this? What's anybody's thoughts? What can we do in a market like this? What is the overall, first question to ask, what is the overall tendency for the stock market in general? What's the overall tendency of the stock market? What do you guys think? What do you think? Yeah, Peggy, to go up. Jim, is September typically a tough month for trading? It can be, you know, markets like to have tough months. September can be a little sideways. October's typically kind of a bad month in the stock market. Yeah, September's kind of hit and miss. We're coming out of summer. We're getting that volume back in the market. It can be tricky. It can be big breakouts and big movements. This kind of depends. But yes, guys, yes, Peggy, yes, Lenny, yes, Jim. The tendency of the market is to head higher. Hey, Andrew, glad you could make it in here with us. Andrew, don't think it's going to be a good ride for the next few months. Andrew, I think you're probably on track on that one. I think this political uncertainty that we have, you know, as far as elections coming up, and then we know there's going to be fighting after the elections. This is probably going to be a messy election. No matter who wins, there's going to be arguing about who really did win and blah, blah, blah. It's going to probably be messy. And so we're probably going to see a little bit of sideways, some volatility. As volatility goes up, it's going to bring the stock market down. You know, we may see some of that. And so the best thing that we can do right here is follow the momentum, right? Yep, exactly, Mel. Uncertainty and VIX, two good things to look at. We'll look at the VIX. But follow the momentum. There could be some short-term trades that we could do bearish here. Now, what have I said in these webinars 100 times, and what have I told everybody 100 times? Is really the only trades I want anybody to do is sell a put, number one. Sell a bullish put spread, number two. Own stock, write covered calls. That's the only kind of trading I want anybody to do here. So if you guys are looking at this thinking there might be a really good opportunity to trade SPY with a bearish call spread, yes, or to buy a put, yes, I don't like that. I don't like those. I don't really ever get on board with any of that. What I think we should be doing is leaning towards the longer, bigger term uptrend here, because I think it's still going to ultimately take effect. I think ultimately we're going to see the longer term uptrend still play out. So then what do we do with these markets, right? Number one, we find stocks you can afford. Stocks you can afford, so important. Stocks you can afford. That's just first and foremost, because what we're going to do is if we think volatility might get messy, and if we think things are going to be a little bit crazy, which I think they probably are, then we're going to put on bullish put spreads here. I'm going to say, okay, I might trade a bullish put spread on SPY and just give it a longer expiration. Exactly, Peggy. Yep, give it a longer expiration. So I might, instead of going out 3 or 4 weeks right here, I might go a little bit further and bring it out, 6 weeks, 8 weeks, right? To get through some of this craziness. But then again, I can't do that. Well, not everybody can do that on SPY because SPY costs $333 per share. So not everybody has a big enough account to own 100 shares of SPY. So we want to find stocks that have a recognizable trend that we're saying, hey, here's a trend I can see. Let's rock and roll. I can afford to own the stock. It seems to be making higher highs. And I'm going to give it a 6 to 8 week expiration on a bullish put spread. And I'm prepared and I have the available money in my account to own at least 100 shares of that stock. So if this continues to dip down, if we go back, let's look at a longer term chart here. This is SPY, same one we're looking at. If anyone's not familiar with SPY, this is just our index fund for the S&P 500. If we look at the SPX, the actual S&P, it's going to look the exact same. What has happened here over the last, I think that's as far back as my charts go. This takes us back to 1986. What has happened here since 1986? 1986. Now, that if my math is correct, that's 1,000 years of trading. No, I don't know. Let's see, 1986. That's 31 years, 33, 35 years of trading, 34 years of trading. So here's 34 years of trading right here. We've had periods of, here's our dot-com situation. We had a high in September 2000 that took us all the way to the low of almost September 2002. So pretty steady downtrend for 2 years. So there's that. And of course, we have this high of October 2007. And it bottoms out in, the beginning of, about 1.5 years of downtrend. Those are the longest in the last 34 years. We had a 2-year downtrend after the dot-com burst. And then we had this super big high over here, which caused about 1.5 years downtrend for the whole 2008 situation. So there's those movements. But then for the most part, we have a couple of weeks here and a couple of weeks here and a couple of weeks here and a couple of weeks here. I mean, it's pretty safe to say that 90% of the time this chart is going higher. All we have to do in trading is say, what are the logical things that are happening? I'm talking to myself a little bit, by the way, because I do get a little off track sometimes, and I try to really, go too crazy and get every movement and try different strategies and so on. And that's all good. We need to experiment. We need to make sure that we're kind of looking at all the opportunities and possibilities of trading. But then again, when it gets down to it, we just have to say, what does the market do the most? And then I'm going to participate with that most thing, right? I'm just going to participate with that most thing. I have a friend that I told you guys probably in the past that said, you know what, at the bottom of the coronavirus sell-off, he said, it's going lower. I know it's going lower. I'm closing my whole 401k retirement plan. I'm closing everything. And I said, don't do it. And he did it anyway. And of course, the market turned around. Because how long does this go down? 10% of the time it goes down. Maybe 20% of the time it goes down. At the very, very most. 80, 85, 90% of the time, the market just goes up and up. Now, unless we're Japan that had their high in the 1990s, 1999 or whatever, and they've never come back to that, then chances are we're going to continue going up. So let's stay bullish in this market, but let's put ourselves in a position to be bullish with downside protection against this, against a possible, larger bearish sell-off. If we look at this chart right here, here's SPX, here's SPY, same thing. If we look at this chart and we say, okay, here is a big bullish candle right there. And what do we have right next to it? A big bearish candle, right? And then we're well below those the candle body lows. So this thing is trying to do this. And maybe it goes all the way down, maybe it goes down this much, right? But whatever amount it's going down, it's probably going to go down further. It might go down for several more days. It might go down till the end of the year. Who knows? But what I want everybody to look at is and do is say, okay, here's the only trades I should be doing. Number one, let's put this into notes here, because this is, I think we're going to go into a tricky time of trading and a tricky time of markets where we have to say, okay, there are certain things that I should do and certain things I shouldn't do. I don't want to hear about anybody getting in trouble by doing the things that I've said many times not to do, right? And I say this for your guys' sake, so you can say, okay, all right, I'm clear on this, right? So, number one, we want to trade options on stocks we can afford to own. Number one, first and foremost. Number two, only sell options. And that means credit spreads, specifically bullish put spreads, right? That's what we want, bullish puts. That's all we want. Just only sell options. Now, of course, in a bullish put spread, you have to sell an option and buy an option. Fine. But the real trade is selling the option. Don't buy options. Just don't do it. Don't buy a call. Don't buy a put. A very small amount of time, you're going to make money doing that, and there's going to be a huge trade that's going to happen right after we finish this webinar where you think, I should have bought a put or I should have bought a call and I could have made a killing. This Jared guy's crazy. Yes, that could very well happen, but 99% of the time, we're going to get ourselves into trouble by doing things that overall don't work, right? And most people don't have a ton of success in their early years. I'm not even saying early days, early years of trading options if they're buying options. Most people are not successful at that. It takes a lot of time and experience to successfully buy options. So for now, I hate to sound boring and like the old man that I am, play it safe. Safe is good in trading because it keeps you in the game. Don't buy options. Number four, all the elements of selling options is what we want. So selling options right here is time is not working against us. Time working against you is the worst thing you can have. When you're buying an option and time is working against you, that's terrible. We don't want that. And if you're an option buyer, time's working against you. The market has to move big to offset that time decay. Those two things are like saying, you know, I could swim 20 miles in the middle of the ocean as long as I don't run out of energy or get eaten by a shark or get stuck in a storm or get a cramp. Otherwise, yeah, I could swim to an island 20 miles from here, you know, but you know, those are some big factors, right? When you're buying options, the big factors of time working against you and the market needing to move in your favor, it's just terrible. Don't do it. Don't do it. So only sell options. Only sell options. Bullish put spreads. That's all I want to see anybody do. And so those are the things that we want to do. We want to make sure covered calls. Own stock, sell options. That's what I want you to do, right? So those are the trades. Sell options. And these are bullish put spreads. You know, you can a naked put where you're just selling a put and you don't have protection. But I actually don't even want you to do much of that. I want you to trade credit spreads because we're going to have a ton of protection. If we're using these bullish strategies in a market that's dipping, it's going to hurt, right? It's going to hurt a lot, and we don't want that. So if the market is dipping, then we're going to trade these bullish put spreads, and we're going to go with a longer expiration. And we're going to say, okay, if this is going to continue to dip, remember, this probably needs to be number one, but so that I don't have to renumber everything, we'll make it number 5. Over time, the market always goes up. So we've got to remember that little detail. Over time, the market always goes up. So what can we do, being bullish in a bearish market? We can trade bullish put spreads, and we can give it a little extra time, 6, maybe 8 weeks, right? Give it 6 to 8 weeks. Give this thing plenty of time, and make sure that our credit spread that we're trading is, in a worst case scenario, let's just say that this time, this is the time that the market actually falls apart. This is actually the time. So then make sure that whatever your worst potential case scenario is on the credit spread, that's okay, right? Chances are you're going to be making $50 a contract and risking $50 a contract. So go in enough contracts that you can make enough money that the trade feels like it's worth your time. Go in few enough contracts that you can afford to own that many shares of stock. If not, you can always close part of the trade partway through. That's okay as well. And also, make sure that worst case scenario, that $50 a contract that you might be losing on that credit spread, that if you just can't make this trade work, like this thing is just dropping too much, the market feels too unstable, and at expiration, you're not ready to be assigned the shares of stock, and you say, this one's not the one. This is not the one that I want to own shares on because the market feels really unstable, and it has for the last 6 or 8 weeks, and so I just want to take the credit spread loss. Fine. Make that take that loss of $200 or $300 or $400 and be okay with it, right? Don't take a loss of $10,000 or $20,000 or $15,000. The stuff I see on a daily basis, I meet with a lot of people and talk to a lot of people about trading. I see big losses because people want big numbers, but with big numbers come big losses. Remember, in a credit spread, typically our worst case scenario is the credit spread just runs in our favor and we take the max profit, and that's pretty boring. But that's also a win, and a win is always good. But what we want to see is we want to see these things go against us. And so the max profit and the max loss on a credit spread, we're typically not super focused on, because what we're really looking for is the fact that the market's choppy, it's up and down, it's all over the place, and that we're looking for this thing to go against us a little bit so that we can close our long leg, keep our short leg, get assigned, turn it into a covered call. Everyone moves on and has a Merry Christmas, right? That's what we're looking for. So with this market right now, remember, trade options on stock you can afford to own. If you can't own Amazon, don't trade an option on Amazon, right? If you can't afford to own 100 shares of Amazon, don't trade Amazon. Just don't do it. Just don't do it. Only sell options. If you're tempted to say, this thing just looks like it's going, I'm just going to buy a call option. Don't do it. This thing's really tanking. The S&P, the SPY is dropping. I'm gonna buy a put. Don't do it. Or hey, I think I can actually limit my exposure by trading a debit spread, a debit call spread or debit put spread. Don't do it. Don't buy options. Just don't buy options. Only buy options if it's the other half of your credit spread. If you're selling a put and you got to buy a put at a lower price, great. That's the only time we're going to buy options. Own the stock, sell options, trade covered calls. That's what we want to do. Over time, the market always goes up. So if we're in a trade and we say the S&P is making, we feel really confident that SPY is going to take a major dip. What I would recommend doing, what I think is the best idea, and this may not be right. This may not be right for you, right? You might say, thanks for that advice, but I'm not going to do any of that. And that's okay too. But I have the advantage of looking at everybody's trading accounts constantly and a lot of years of experience and just knowing what typically works for newer traders and what typically does not work for newer traders. These things are like the golden rules of newer traders. Just follow these 5 simple points right here. But if you look at this and you say, okay, Jared says don't buy a put, and I feel like he's wrong, but maybe I'll just take his word for it. He says don't buy a put, but this thing just looks like it's going to break out and head down, right? And it breaks out and heads down. You think, I should have bought a put, shouldn't listen to that guy. Here's what you can do. You can, if you can afford to own the SPY. If you can afford 100 shares at 333, now remember, for most of you that are with Tastyworks, and most of you guys are, and most brokers do this, $333 times 100 shares is $33,000 divided by 2, because most of the time we only have to put up half the amount that it costs for the shares. So if you've got $16,650 available in your account that is not going to stop you from taking other trades, do this, right? If you don't, then better to just find a stock that is that's affordable, right? Because if you're trading a $5,000 stock, let's say I'm just thinking off the top of my head, Delta, right? I think Delta is trading it, we'll just say 31.50. I don't know if that's actually true or not, but Delta Airlines is trading, oh, it's way off, 31.79. Delta is trading at 31.79. So Delta is trading at 31.79, and you're thinking to yourself, okay, you know, I'm gonna, well, actually, let's go back to that 31.50 because that would be more of a strike price. We'll say we sell a $31 put on Delta, and we end up owning 100 shares. That's $3,100 divided by 2. We only need to have $1,550 available to hold 100 shares of that. Great, that's awesome. That's great. That's totally good stuff. So that's easy to do. So now when we look at this and we say, all right, this is something I can afford to own. I've got, you know, $100,000 in my trading account, $50,000. I'm fine. I don't care about tying up $16,000 on 100 shares. Then we're going to put on a bullish put spread right here. But if this does drop a whole shooting shebang, then what we're going to do is we're going to let our long leg, which is that lower buy to open, just gain a bunch of money. We're going to give this thing, I would say, probably at least 8 weeks, right? Because the SPY looks a little shaky, So I'm going to give that thing 8 weeks, and I'm going to say, drop, go ahead straight down. I don't care. And my long put all the while is going to be making me money, and that's going to be bringing my break even down. So even though I might get assigned shares of the SPY at 333, my break even might be $290 when it's all said and done. So I'm just getting into a trade. It's like this kind of trade is like bowling with the bumpers up. You can't get a gutter ball. The only gutter balls you can get are when you ignore one of these 5 things, right? And you say, forget you, I'm going to trade a bearish call spread. I would love to talk to Tastyworks and say, can you delete this short call vertical? Can you just get rid of that? Just hit the delete button on that and delete these other 2 as well. Let's just keep the short put vertical. That's all we want to trade. So as long as you abide by these 5 simple principles that we've talked about a lot of times, you can make plenty of money on the way down to offset the loss of the trade. You can own shares of this and just say, okay, I own some shares. I'm going to turn this into a covered call. I'm going to ride this thing back up, because what happens over time? Stocks always go up. Stock market always, well, not stocks. You know, there are some stocks that get into a free fall and they can go down and get ugly, but the stock market in general always goes up. So as long as you do these things, you're going to be able to survive this crazy, wild, silly market that we're probably going to see for the next 2 months, 3 months, I don't know. Okay, sorry, I've been ranting for a while. Let me see your guys' questions and comments. Okay, so 1, 2, 3, 4, I think that's Janae. Nice to see you, Janae. Also want to own assignment on stocks that have high-paying covered calls. Ooh, good point. Thank you for bringing that up, Janae. That's the thing we're always going to look at. So if we're saying, hey, I'm willing to own this stock, always look and make sure that a 2-week out at the money call option sells for enough that you feel like it's worth your time. If you look out and you say, okay, at the money option on stock XYZ is selling for $2, I don't want that. That's not worth my time to take this trade. But if I look out 2 weeks at the money option, you know, let's say I'm looking at Delta here and I'm saying, okay, I'm going to do a bullish put spread on Delta. If I end up, I'm going to sell, you know, I'm going to sell the 31, I'm going to buy the 30. And, you know, in credit spread terms, I might even go here. And in credit spread terms, I would say, well, worst case scenario, my max profit's $56. Fine. But if this thing makes a huge drop, then what I want to know is 2 weeks out, how much is an at-the-money option selling for? This is 2 weeks out, 15 days out, right around at-the-money option selling for maybe 150 bucks. Great, I'm good with that. If I notice that, let's say Zynga here, good old Zynga, right? 2 weeks out, an at-the-money option selling for $35. That might not be as worth it for me. I may not want to do that one because I'm saying, 35 bucks, that kind of stinks. Delta, yeah, I'm tying up less money. Maybe I can just do more shares, but I want to make sure, for me, usually it's about the $100 threshold. I want to make sure that 2 weeks out at the money, I can sell an option for at least $100, at least. And that's on the low end, but that's kind of my personal threshold. Okay. So thanks for bringing that up, Janae. Good reminder. Andrew, idea set some really low limit orders for bull spreads. See if they can get hit during downward volatility. Andrew, that's a fine strategy. Yep, that's totally good to do. That's just fine. No problem. Dan, right? Dan Bot? Is that you, Dan? Am I making up your first name? Is that not correct? I feel like it's Dan. Okay, good. How about using GDX as an example, more likely to go up because the Fed is printing money? Thoughts? Yeah, I mean, GDX, gold, anything gold related is still, appealing. So, and Dan, we'll talk about that because I think there's stocks and I think there's areas that we need to focus that will be more, that'll do better, right? A lot of people were buying tech stocks because they were so exciting. A lot of things were happening. And in my trade group, we're buying Alcoa and Bank of America and gold and Southwest Airlines, and Snap is kind of an exception. And all of our stocks have done fine or better as the market has been correcting and dropping and doing terrible. All of our positions have been good. Peggy, take my word for it, he's right. I tried early on and took a big loss. Thanks, Peggy. Anytime someone tells me I'm right, that's exciting news. So it's not very often. So yes, just do these simple things, and this is how we are going to survive the next couple of months. And not only survive the next couple of months, but make money the next couple of months. That's what we want to do. We want to make money. We don't want to just get through this thing. We want to make some bucks, and to do that, we have got to do this. So to go back to your, and here, if anybody thinks that this is gospel worthy, I'll paste this in the chat so everybody can kind of look at that, and you can, remember the things that we're talking about here. The other thing to think about here is, what stocks are going to be best to trade. Dan brings up the point of GDX. And so GDX, I like GDX. I like, as we go back to patterns over here, we say, well, what are some of the patterns we're looking at? Look at this inverse head and shoulders. Let's see, I don't think this has rounded bottoms, but see that inverse head and shoulders where it says this is what you want to do. You want to trade an inverse head and shoulder when it breaks the neckline. You may not be able to see that super well. You want to trade this kind of thing, right? Inverse head and shoulders, a low, lower low, higher low, breaks that neckline, we trade it back up to the previous high. So that's the kind of thing that we want to be trading. What is GDX doing? It's not a perfect inverse head and shoulders, but it's a pretty darn good one. So GDX is doing this, right? We have, this is more of a rounded bottom, but we've got this nice, nice little pattern here where it is breaking that neckline, which is right here, and heading higher. So that makes GDX good in my book. And where is our target? Previous highs, right? Previous highs. So we have some good space to be looking for there. And that's why I'm trading all these kinds of stock. I had some limit orders on GDX and didn't end up getting filled most of the time. But I have the same thing happening on gold, right? Barrick Gold. I've got, we've taken a couple of trades in the group on this one lately, and it's, it's stalling out a little bit, but it's it's hanging in there. You know, it's been a good week for gold because once again, everyone's kind of panicked a little bit. What's happening? The market's correcting. What are we looking for? Well, I'm looking for a little bearish, bullish inverse head and shoulders pattern. I'm looking for this thing to go somewhere in that vicinity, right? That's all I want to see happen. So find stocks you can afford to own. Who can afford to own Barrick Gold at 30 bucks? That's a $1,500 requirement for 100 shares. Probably most people can. This pays okay, right? We're getting at the money option 15 days out. We're right at that about $100 mark. Well, there's that's money. Just a hair over 100 bucks. Great, we'll take it. Awesome. That's what I like. So these kinds of things we want to, we want to look for when we're trying to, trade this market. And remember, with this kind of a situation here where we say, okay, here's the, the basic criteria that we want to stick with so that we keep ourselves out of trouble and so that we can make some bucks. And then we want to find stocks that, have had a lesser recovery. What stands to do the best as we get this virus positive news happening, right? I don't want to get too political, but I have a feeling that whatever happens in November, no one's going to care about coronavirus anymore after November, right? Not because it's enough ahead, but I think it's become a little bit political as well as health-wise and so on. I'm not discounting the seriousness of it, but I think there's a lot of political ties to it. And I think that these kinds of stocks are going to benefit heavily from that kind of stuff, right? We're going to see these stocks, these airline stocks that have just taken a beating, they have a lot of room to go just to get back to kind of pre-corona highs, right? We've seen all these tech stocks that have gone bananas. They've gone totally crazy, totally nuts, and they're so volatile and they're so fun to trade unless you got bullish here at 475 and this thing pulled back to 350 on you and you're thinking, holy smokes, that's scary. So these are crazy stocks, right? These ones move a lot and they get a lot of people worried. Tesla's down 35%. This is a weekly chart in 2 weeks, right? The high and low of 2 weeks is a 35% range. That's scary. So I'm not super interested in those stocks right now. They're exciting to trade and it seems fun to, to jump on board with that wild movement. But find stocks that are going to benefit the most from coronavirus kind of getting in the rear view mirror more and more. Maybe it's not, maybe it is, I don't know. But these kinds of stocks are going to be doing good. These kinds of stocks are going to be doing good. All these banking stocks, as the market kind of gets back to normal, banking stocks stand to do super good as well. If they don't, that's okay, right? Because what do? We put on a bullish trade and we let the bank stocks go down. We own the stock and then we ride it back up, right? And our worst case scenario is, well, if this goes down a bunch and I just don't feel super comfortable, then I just take the credit spread loss, which is going to be pretty minimal, right? So that's the kind of stuff we want to do. Start a trade-off in a conservative manner because it's just a credit spread, right? But most likely we're going to be able to take ownership of that stock and come out swinging with some good profit. And that's the kind of stuff that we want to do. If we just follow these, those simple 5 things that I listed a little bit earlier. Okay, Dan, almost cup and handle. Yes, okay, Andrew, I like the group Jets during recovery. I did take some risk and place 5-month out long calls on this group. Jets. Is that the stock? Okay, maybe I'll sell it in profit and sell some puts on the airlines. I think it's a great idea, yeah. But this looks interesting. I'm not super familiar with this one, but it's one you can own. It seems to be moving well. It hasn't recovered a lot, right? And that's what we want. These things that are kind of rounding off these bottoms and have not recovered a lot, right? Long way to go. 32 bucks. This stock needs to double to get back to pre-corona highs. It's a lot of room to run, and I like that. Those are the kinds of stocks I'm looking for. So I think those are going to be the good things to look for. These nice retail consumer cyclical stocks. So remember, if you're looking for those guys, go to your stock screener that I've shared many times in here. Go here, Let's see what settings I have saved. Price above the 200 moving average, don't even care. Show me consumer cyclical stocks, right? And there's 92 of them that have volume, they're optionable, they have a $2 billion market cap, US stocks, there's 92 of them. And if I say, okay, well, I'm an average guy with an average trading account, I can't afford to own all of these, I can only own stocks that are $50 and less. That trims me down to 49 stocks. Consumer cyclical, 49 stocks under 50 bucks that are meeting our criteria. Foot Locker, Ford, Carnival Cruise. Oh, never mind. That's Carnival Corporation. What is CU? What happened to CU? Did they change? Is this? Anyway, I don't know. Oh, CCL. Oh, there are two. Carnival Corporation. Carnival Corporation. What am I missing? Anyway, I don't know. But Carnival Cruise Lines, right? You know, we've got all these American Eagle. American Eagle's killing it. These guys are. Here's another one that I like, right? Long way to go to get back. They're actually almost back to their Corona highs right here, but they've been in a big slide, but they're starting to turn around as well. So this is an opportunity to get in on a lot of these guys that are, you know, making a run. The Gap, right? H&R Block, International Paper. These are all interesting stocks that I like right now that I think have good possibility and good potential for continuing to trade higher. So I like these. I like these. Let's see, questions and comments. Dan, how do you get those purple pivot points on your charts? You once told me, but I forgot. Go right here on TradingView to indicators and strategies and just type in pivot, and it's just standard pivot points. And then when it goes on your chart, I've got lots of pivot points on my charts. When it goes on your charts, then you go in there and configure them. I think daily, week, okay. So you just go in there and configure them and so on. Okay, let's see. Andrew, what about buying the leader in consumer cyclicals? Yeah, always good. I like stocks that are moving a lot and doing well. So who is the leader? I don't know who the leader is right now. There's some that are doing really good. You can go to consumer cyclicals and you can say, okay, how about performance, right? What's this stock been doing? Up today, up this week, up this month, right? Up this quarter. You know, that's something to look at. 10, 20%, 30% up this quarter. We go to that, that's going to give us, you know, 15 stocks, right? So you can look at those kinds of things. So yeah, that's a good thing to do as well. I don't know who the leader is off the top of my head. GM just did a huge deal with Nicola. How about GM? Yeah, well, how about both of them, right? I like both of these. I like GM and I like Nicola. I think those are both good ones. GM is always on my radar. I think this is a great stock, and I think these guys are going to come back in a major way. GM hopefully is too big to fail. You know, I think this is going to be one where people say, well, I'm scared to have my money in Tesla. I really want to have my money in Tesla, but I'm scared because it's, you know, what other stock is up and down, you know, 20 or 30% in a 2 or 3 day period? That's Tesla. And it's exciting, but it's also scary. So GM is always a good one. I like GM. Who can afford to own GM at 30 bucks? Probably most people. Awesome. Let's do that. GM's a good one. Nicola. Whoops, I'm typing that in over here. This is a good one. I like this one. These guys have, you know, they have GM backing them. They've got some good things starting to happen here. I'm just curious. Nikola Tesla's full name. I'm just wondering if there's going to be another. Oh boy, those are some. There's some other stuff in there. Okay, well, maybe do we? No, it's just Nikola Tesla. All right. So I was going to say, if he had a middle name, then we could probably count on another electric car company coming out with that name. But I think this is a good one, right? Once again, $37.50. Who can afford to own this? A lot of people. If we look at the stock over here, how much is it paying? We're paying enough to make it worth our time. Going on here. Let's go out 2 weeks. There we go. At the money option. That's all right. At the money option, 2 weeks out on this guy's paying $400. Okay, I'll take that. That sounds worth it to me. So those are the kinds of things that we want to look for, guys. Okay, Glenn, how many months out for most of these spreads? 2 months. 2 months is usually pretty good. Usually that's pretty good. 6 to 8 weeks is kind of, you know, as we're going into uncertain territory. Usually I like to go out 3 to 4 weeks, but I think right now 6 to 8 weeks is kind of a safer expiration date on most of these. We can work our way out. We can do good stuff. 6 to 8 weeks is kind of a good expiration on these now. Andrew, home building infrastructure may be a good idea with low interest rates, recovery possible, infrastructure build pipelines. Yes. Yep. So building's going crazy. We've looked at lumber futures. We know that that's just going nuts. Lumber is just, once again at probably all-time highs or thereabouts. So, yes, building's going crazy. There's going to be those that will be able to massively take advantage of some of these commodity prices going through the roof. So yeah, infrastructure stocks, building stocks, those are all interesting, good ones that I like. Okay, questions, comments. Is everybody clear on what our main course of attack is here? Give these bullish put spreads a little bit more time. I only want you to trade bullish put spreads, trade covered calls, own stock, pretty much nothing else. Market goes up over time. What else? Everyone good? Are we pretty clear on how we're going to stay out of trouble and make money over the next couple of months while the markets are probably going to be a little bit weird, a little bit strange, a little bit less than probably easy to trade? You feel pretty good about that? Everyone feeling pretty decent there? Okay, so that's all I have to say about that. Andrew, good luck out there, my friend. Good luck out there in Northern California. I hope it doesn't burn down either. California is my home state. I love California to death, and I'm always sad when there's lots of fires and lots of crazy things going on. So hopefully it blows over, but we don't want any wind blowing. So just hopefully it is done. But yes, best of luck to everyone. The orange skies are always nice. The orange sun is always a good look. Oh yeah. Yeah, Dan, it's good. That's good. That's a good point. Lumber futures may continue to climb as more trees burn down. That's for sure. Air is not fit to breathe. Oof, I know, Mel. That's terrible. That is terrible. Actually, where I am in Utah, Salt Lake earlier this week had some of the worst air in the world because there's a few fires in Utah as well. The skies have been super hazy and just super yucky. So now these masks can serve two purposes, right? You can keep coronavirus out, and hopefully you can keep a little bit of gross, yucky smoke out. So that's all good stuff. All right, you guys, stay safe, be well, have a wonderful coming weekend. I'll post this recording for everyone to have a look at, but hopefully this was helpful information for all you all. And always lovely to be with you guys. Take care. Thanks for being on, guys. Have a good one, and we'll see you soon.